There you go. Looks good now. Retweet.
Okay, let's post and.
I got another round in OpenAI, NVIDIA, Amazon deal today. Round and round we go. Never stopping.
All right, there we go. Um, so where are you right now, Ben? Are you still in LA?
Yep, LA.
Okay, didn't know if you made it back to um, Wisconsin.
No, I'll probably be there in the holiday season. It's weather's pretty nice here. I was at the Rams game yesterday. It was they played the New Orleans Saints. That was a bit of a blowout. It was like more like going to a bowl. Very relaxing. That stadium is incredible.
Yeah, it looks. I mean, going to football in nice weather is so much different from here.
Yeah, I
Like,
mean like
you wouldn't see
oh
me or Bob at a football game unless it's in September.
yeah, I mean I have season tickets to the Packers and I'm pretty much a September October player. Like the full game to bundle up. It's you got a flask of booze. It's a tough ask. Those cold games.
Yeah. By the way, before we begin, which we're live already, but before we begin, your audio keeps popping in and out a little bit.
Yeah, I don't know what's going on.
Crackling.
We'll just
That's better.
hopefully it works. It says that the button. I can see the buttons moving. So
All right. Well, good. Well, it's Monday. It is November 3rd, 2025. I think I said in June or something like we're getting through the year and Bob or somebody was like, "What do you mean we're like halfway through the year? We might be halfway through the year, but don't start claiming it's over." Well, can I say it now? We're in the last innings of this year, and what's good is on a Monday we have some deals for companies that we've been involved with, so that's it's mostly good. So it's actually all good from my side, all good on your side, Ben. I don't know if there are any deals in oil and gas, but I'm joined with Ben Bry and Bob Morris, and we're going to kick it off with oil and gas because we've taken a cold turn here in the Northeast. That must be good for oil and gas. But Bob, what's been going on with the stocks? What's been going on with the price of oil?
So, the cold weather is good for natural gas. Oil is really focused on other factors. And OPEC had their meeting yesterday that it was interesting. Last week, like the month before, the market got nervous that OPEC was going to increase production by more than they had been doing. And the oil price was down. But they came in and said, well, for December, we're going to increase it another 137,000 barrels per day, which is what they did for October and November. So they didn't really surprise to the upside like the market was concerned about. And on the positive side, they said, well, we're going to pause for the first quarter of next year. So January, February, March, we're not going to increase production. We're not going to continue to put more oil or more barrels into the market, which on the one hand, you would think would be positive that they did something in December that was in line with October, November, and they're not going to do anything in January, February, March. But the other side of it was people said, oh, well, that's because they're concerned about oversupply. And so, it's sort of six of one and half a dozen of the other that, good news is bad news is good. Well, in this case, I guess good news is bad in either case. And that oil is down slightly here today. It didn't provide any support or bounce to the oil price. And so at the same time, we got some more earnings last week. It'll be heavy with earnings this week, but Chevron came out, Exxon came out, and production top expectations for both companies, particularly Chevron. And the theme that we've been talking about ad nauseum here is the efficiency gains and companies being able to do more with less. And so while Chevron's target was to keep their Permian oil production flat going forward at about 1 million barrels a day, it came in slightly above that. So, the other side of it on the supply side is that these companies continue to beat, for the most part, on the production side, just because of these efficiency gains that allow them to get more production with the same or less activity than what they planned or had done in the past. So net oil prices, they're at the bottom end of this $60 to $70 per barrel range, and I think they will be in near term. And that's, continuing to weigh on the market. And, what is the bull case? We've said all along, it's hard to come up with a bull case for oil prices. Well, the little bit of the bull case, if you want to call that, that's creeping in, and I don't think it really is a bull case, but if somebody wants to make a bull case, it's that now you've got the Trump administration threatening military action in both Nigeria and Venezuela, both big oil producers. I don't think that's going to happen to the extent that it interrupts or impacts oil production. But if you want to grab onto a headline and say, well, what is the bull case? That's what somebody would grab onto to be bullish on oil prices here. In the meantime, we continue to try to put the clamps on Russian oil output, but as we talked about last week, that oil tends to make its way into the market regardless. And so, yes, while we are heading into the winter, the oil stocks seem to be under a little bit of pressure here just because of this lack of a bull or constructive case for oil near term. But natural gas continues to be positive, and the names that we've pounded the table on all along here as our go-to names. Expand Energy and EQT continue to do well here. EXE is up 5% in the last week. EQT, I think, is up a little bit more, 3 or 4%, closer to 4% in the past week. And that's the fact that we're starting to get into winter and we're starting to see that weather and that demand uptick for natural gas. In the meantime, I wanted to point out on Chevron, they reported a very good quarter. We commented last week that we like Chevron, would own that name. It's our top pick among the integrateds, and they reported a great quarter. I mean, they pretty much beat across the board on production, on their downstream marketing and refining margins. And that's a name that right now it's a 4.3% dividend yield. And, looking at this technically, it's sort of in nowhere man's land here, in that it has just recently dipped below the 50-day moving average. The 200-day moving average is 151. I think there's strong support at 150, but in this range of 150 to 155, I'd be a buyer of Chevron still here if you don't own it. I still own it. I still like it. Again, it's my favorite name among the integrated oils. If you're nervous about oil prices here, you've got less volatility probably in a Chevron than any of the pure producer E&P names, just because Chevron does have the downstream marketing, and they have some very good international assets in Guyana and elsewhere. So I was very pleased with Chevron's earnings on Friday. It's still a name that I would own here in the portfolio going forward.
Okay, sounds good. Well, I own a few of those, so let's hope you're right. If you're
I also own Exxon, but I prefer Chevron over Exxon, but I own both of those. But I have a bigger weighting in Chevron versus Exxon.
All right. Well,
and we've got a big earnings week ahead this week, so we'll see how this goes. I mean, this week, we've got Diamondback tonight after the market close, which we own a little bit of Diamondback. Later in the week, we got Devon, Apache, Conoco, and the big one that we own is EOG. And that's one I'm a little nervous about. It's been weak here recently, but they'll report after the market close on Thursday. So that's a big name I'm keeping an eye out for here this week.
So like a company like a Diamondback, I know you don't day trade, but if you were a day trader, is that something where you'd be like, you know what, I'd take a roll of the dice on that? Or is it, hey, listen, that's so not what you do that you can't even think of that?
I can't even think of that. I'm not going to day trade Diamondback. I mean, if anything, I would have maybe day traded Chevron last week because I felt good about them beating. But, Diamondback, some of these E&Ps are such a wild card. It's not a name that one in particular I wouldn't day trade.
All right.
Nice try, but no.
I'm trying to get you on the hook on something that I can
Trying to get me on the hook on something here.
Yeah, something I can hold
Day
against
trading
you.
Diamondback. Come on, man. There's not even enough liquidity to be day trading EMPs these days.
Exactly.
All right. Well, all right. So let's segue to Ben. Ben, you had a deal in a stock that you owned.
Oh,
Are you holding
by
on
the
to
way,
it, or are
by
you
the way,
getting
my
rid of? Oh, sorry.
by the way, my price target on Chevron is 172. I want to mention that too. The 12-month price target on Chevron is 172.
All right.
And they have an analyst day coming up next Wednesday, the 12th. I'm going to mention that. So that's going to be a big day. I don't think there's any surprises, anything shockingly new, but they will have their first analyst day they've had in 2.5 years. But that'll be in New York City next Wednesday.
All right. Maybe that's when they announce they're buying Hess Midstream. So, all right, Ben. Let's segue to you. You had a deal announced in stock that you own. Are you holding on to it? Are you out of it? What are you doing?
I'm out. It was actually, sometimes you get a little lucky, and there's a good saying, it's better to be lucky than good. So last week on the 20th or 29th, I can't remember which day it was, but I saw my Bloomberg a headline. You guys know KView, right? So KenView is a spin-off out of Johnson & Johnson, and it's their Tylenol asset. And, you always have to wonder why a company gets spun out, right? There's motivations in why they do these things. Johnson & Johnson has, let's just call it, a little bit of a shady past, going back to a number of products over time. And they're terrible owners of the Jets as well, just to put that in there as just a little zinger, okay? So this thing has been down on the right because of this litigation going against Tylenol, which I'm sure David, can comment on more than me. But so last week it comes out that they had been, they ruled in favor of them, and I bought the stock like 14.40, I don't know, something like that, 14.25, 14.40. And then this morning I wake up and it's like, why is this thing up 25%? And I see Kimberly-Clark they offered a buyout. And then I looked at the terms, because if it's a cash buyout, that's one thing, but it was a stock buyout. So it's like, I got to sell the stock because the ARBS guys are going to come in here and hammer this thing. And so, Kimberly-Clark closed on Friday at 119.60. It's at 104, 105 now, which is a 5-year low, right? So I don't have an opinion on Kimberly-Clark stock. And again, I think just because I bought it last week, it was like, hey, you know what? This pays for a few of these bubble stocks like Tesla that I'm short that are going the wrong way for me. So I'm just going to take it. But the deal math is 0.1425 times Kimberly-Clark. So per share, you get 0.1425 shares of Kimberly-Clark plus $3.50 a share. So that comes out roughly to like 1860 or something right now. The stock, let's just see, stock's at 1682. So you have about what is that, a 10% discount to the the deal math, but what they announced it was $22, right? So on Friday's price plus it was 22. It's actually funny because the Bloomberg headline story on the app was this, and at first it said 22, and then I updated it, and then it said 2101. So now they're having the algo pumping in the real-time price to it. But I don't know. It's the bigger takeaway. You're going to talk about this as something that I liked as maybe a potential long, but then look, sorry subscribers, but I'm glad that I got to get out of it for up $3. But maybe we'll start seeing some of this kind of stuff. You started off the show talking about deals, and maybe as we come into the end of the year, there will be some deals to close off the year, like assets that are somewhat attractive to various people. KView is a dramatic underperformer, and it's because of their litigation much more than their, the state of buying Tylenol, the cash flow part of that business. But it's probably, you look around different spaces, and there's, these are kind of things that happen at the end of the year. Bankers want to make their deal, their bonuses. Some companies want to make numbers. These kind of things tend to happen towards the end of the year. Wouldn't you guys say? There's two former sell-side guys. You guys probably seen a number of these things happen over the years.
Yeah, they start working on things earlier in the year. They also have KPIs or key performance metrics, and while very rarely do things say like get a deal done, they'll say things like increase sales by X. And believe it or not, sometimes that's not even qualified by whether it's organic or inorganic. And yeah, you do see a lot of management teams for strategic reasons, but also for a variety of other comp reasons, trying to get deals done by year end. So,
Yeah. The other thing I'd like to talk about is our Weight Watchers has picked up a little bit recently. They announced a little deal with Amazon. It sounds like prices are coming down a bit, maybe going down to 200, which increases the TAM. Not great for your friends over in Denmark, but better for the distributors, obviously. And that stock's back in the mid 30s. And again, just to remind people, that was another not a spin-off, but a reorg. So these are all special situation stocks. And they had dropped $1.15 billion of debt. And remind for everyone, they have a term loan that's callable next summer. So that's like $10, $11, $12 a share in value. So even independent of its cash flows, like Bernest come on the show and talked about that one, that can work even if they don't grow. Like that can just be a public LBO, versus all the good news of like if it starts working and people start buying from there and you get some growth. Well, then that's the triple digit stock scenario. But just wanted to give an update that I've been I recommended the stock at like 36 or 38, I can't remember, in July, and then it went down to 26, and I was pretty adamant the whole time that it was just when the debt guys still owned a lot of the stock and there wasn't a real demand, and plus it had a bad negative bias, right? Keeping the same name has the brand of people knowing it, but then a lot of people remember how crappy of a stock it was. So I talked to a bunch of people who would like asked around where was going on, and people just had that negative bias of like, Weight Watchers. So I just think that it's still no different here than it was at 27, than it was at 40. It's just not quite a real stock yet, but we're back. And you had your clutch, your butt clench moment there at 27.
yeah. Well, prices are coming down, and that's great for them, right? Because they're really about getting people in the doors and online to sign up. So the lower the price, the better.
Yeah, I would think so. I mean, like, if you're a distributor, you want to get as many sales as possible. If it's subscriptions $500 a month versus $200 a month, especially in this economy where you have like Heinz coming out and saying it's the worst consumer economy in decades. Chipotle last week has just terrible numbers. I think the consumer economy does not match the AI, OpenAI, LLM, that world. I think those are two different worlds in the same world.
Yeah. All right. Anything else for us
all
today?
I got.
Oh, okay. Well, you just answered that. So, look, I'm only going to touch on a couple things. This is a huge earnings week on a lot of names. I'm not going to go through the calendar just because, and then play card sharks of higher or lower. Healthcare companies generally do really well when they report earnings. There is two companies that I've mentioned on the show before that had a deal out today. CompoSecure, which makes metal credit cards, among other things, but they make metal credit cards, and Resolute Holdings, which is sort of they're kind of like a Berkshire Hathaway type, but they get a royalty or a percentage of the EBITDA of CompoSecure. Well, today CompoSecure and Resolute Holdings announced that they're going to be acquiring Husky, which is a plastic mold injection company that makes tons of a variety of different things, but because for a variety of reasons, I'm not going to get into the deal, but what I'm going to just talk about, reiterate what I mentioned before, or remind people what I said before, which is this is like a little mini Berkshire Hathaway, and it's run by two guys that did SPACs at Goldman. One is the former head of Honeywell, Dave Cote, and they did the Mirion and Vertiv SPACs, and they're probably the two best performing SPACs ever, but among the best. Dave Cote's sort of a management guru, or I shouldn't say sort of, he's a management guru, so he applies what he did at Honeywell to others. And the stocks are up a lot today. I think the last I checked, Resolute Holdings is up like 75, 80%, and CompoSecure is up 25 or 30%. So just something to take a look at if you're not familiar with the story, as they roll in this and other businesses. Your Kenvue deal is great. I wish it had been for Halion, a company that I've mentioned, which is essentially the same company. I think a much better company without any hair on it. But and I'd love to say that Kimberly Clark approached them and they said no. I have no evidence of that, but I'd like to say it. But Halion's up a couple percentage points today just on kind of the follow through.
The hope.
Yeah, on the hope that, well, maybe someone else will buy another
But maybe they will. Maybe they will. You know, like these things. I don't know. These things have a way of like clustering sometimes.
Yeah, they do. They do. A stock I don't understand right now, and I hinted that I might start to short it, is Viking VKTX. When you mentioned Weight Watchers is doing better and pricing is coming down, remember every dollar that pricing comes down for the GLP-1s is negative for the total addressable market for Viking. So I don't understand why it's ramping up so much now, but it's starting to get into that's I don't think individual investors should short. Every now and then I do it. This I think might actually be a structural short. I spent an entire day the other day working through reviewing their last like 2 years of conference calls. I'm convinced after doing that what they had promised before, what they had hinted, or many people had speculated before, that they would be doing a deal for their products, I think that's evaporated. So I don't see someone buying them out. And right now there's a three-way competition for an obesity play with Pfizer bidding, Novo Nordisk bidding, and they're competing against each other. Each keeps raising the bid. Pfizer came out and said, why would you even think of doing a deal with Novo? Novo won't pass FTC, and that they're just trying to, control the market. Pretty good argument. I mean, I don't know if that's going to win in the end because it's dollars that the shareholders see. Sometimes they don't remember that deals can be broken by the FTC. But that said, there's just a lot of deals going on, and hopefully we'll own a few more of them by the time the next get announced. But I have nothing else for you unless you have any questions in healthcare. But that could be it for today.
Yeah, interesting. The last thing I say is it's red now after kind of opening larger, and the Qs are almost red. So keep an eye on that. The volatility's going up. There's some the repo market is there's a lot of money being pulled out of the standing repo with the Fed, and there's the government shutdown is kind of putting a little bit of liquidity strain on the banking system. So keep an eye on things. I'm kind of of the opinion that things could get a little dicey here, independent of anything to do with earnings or that stuff. So, and today's they did the OpenAI announcement that we said, and but Apple's down since earnings. It was up 5% after the print. So only Amazon and what was the other one? Google are the only two of the Mag 7 that really of last week's earnings that are up still. I mean, Meta got killed, Microsoft's down, Apple's now down. So keep an eye on things.
I think one of the consistent themes that I've heard over a number of shows for a number of our shows for a number of months is that the concentration risk for the indices, that where have things, what's driven the index really, and it's these giant companies at the top, these giant tech companies more or less. And what that means for investors who aren't that familiar with it, what that means is that when that gets unwound, you see the reverse happen. People don't need to sell, they need to sell a large dollar amount, but it's not as though they're selling the entire market for your index fund to go down a lot. It could just be someone saying that, hey, I made a tremendous amount of money on these 5 companies. I'm going to just reallocate that to others. So
Yeah, and one final thing I'd say is I'm just looked at on Oracle. So last or 2 weeks ago, I can't remember, but aggregated all the big eight, Electric Eight, the Great Eight, whatever you want to call, and Oracle definitely looks like the weakest of all of them. I had Meta as the second weakest, and those are two who are trading the poorest. But Meta comes out and said, "I'm going to spend all this money," and now they did a huge $30 billion debt deal. They added $60 billion in off-balance sheet VIE funding. Oracle's even worse, and they don't really have much experience in this data center business. Oracle is almost at the price it was at before that announcement in September now. They kicked off the OpenAI and it's went up 40%. Well, it's almost round-tripped it now. So these are not necessarily things you see at a new leg of the melt-up. The melting part of it is getting narrower and narrower. So keep an eye on it, I guess.
Yep.
And Charlie on our show has been warning about liquidity issues in the financial system here for a few weeks now.
I mean, look, and go ahead.
No, he's been looking to short the banks, and he said he was short J.P. Morgan, and he's very nervous about some of these default and liquidity issues.
Yeah, I'm short J.P. Morgan. I've been short since July. That's done nothing. It literally just sits there, so I haven't gotten hurt, but I haven't made any money either. I really wish I would have shorted the private equity guys. Private equity guys and the business development corporations have been no bid. I mean, pull up Blue Owl or KKR or Blackstone or Ares, or, you name your BDC, and they have not traded well at all for months now. So, the idea, I think Charlie's talking, and I talk to Charlie on the phone a lot. The idea is that we have some, as Jamie Dimon called them, cockroaches, but really it's more emblematic of larger issue.
Well, I'll give one for the traders out there. Teva reports in a day and a half, and I said it's going to be worth 25. So we'll see if I'm right, and I'm willing to say that and jinx it at the same time. So with that, it is the.
Wait, David, are you day trading that? Are you telling us to day trade that?
I can't tell anyone what to day trade. Will I add to it ahead of it, even though I own a lot of it? Probably. I actually think that this is one where just expectations are always like, you guys stink. But they're delivering much better numbers. Every quarter have been better and better. So it's a generic drug company. Be prepared for disaster, but I don't expect that. So again, I'm not going to tell anybody what to do. I don't give advice. But it is November 3rd. Nice try, though, trying to get me on that. November 3rd, 2025, for Bob Morris, Ben Bry, I'm David Maris. Have a great week. I don't know if we just leave or we say goodbye or what do we do?
Are we
Jenny,
still live?
tell us.
All right, guys, I got to run. We'll chat soon.
All right,
Later,
see you,
boys.
Ben.
See ya.
Are we still live? I don't know. Did you get it, darling?